right, so on March 17th, 2026, you look at the market and it's all green. Looks like a fantastic day for investors, right? But was it really? We're going to dig in and decode the real story behind those headline numbers, because what looked like a simple win was actually a pretty complex battle. Let's jump right in. So this is the number everyone saw flashing on their screens, plus 172. The Nifty 50, our benchmark index, finished the day up a really healthy 172 points. On the face of it, that's a solid win, wouldn't you say? And hey, this wasn't just about the big guys. That good feeling spread across the board. The gains were everywhere, from the Nifty 500 right down to the mid and small cap stocks. Everything ended in the green. So on the surface, looked like a picture-perfect day for the bulls. Okay, so let's start with chapter 1 of today's story, the upbeat headline. All the initial signs, all the data, seem to point to a market that's just brimming with strength and confidence. So let's dig a little deeper and look at something called market breadth. It's basically just a head count of the winning stocks versus the losing stocks. Think of it as a great way to check the market's overall health. And today, well, the numbers looked pretty strong. We had 2,366 stocks moving up and only 1,891 going down. When you have more soldiers advancing than retreating, it usually means you got a strong army on your hands. But, and this is a big but, this is where our story takes a sharp turn. With all this great news, all this positive data, you have to ask, was it really as good as it looked on the surface? And that question, right there, is the key to unlocking what actually happened today. Because you see, when we zoom out a bit, a completely different, and frankly, a more troubling picture starts to come into focus. Just take a look at this daily chart of the Nifty 50. See all that red? All those down days leading up to today? That, my friends, is a pretty powerful downtrend. So today's little green candle, sure, it's nice, but it's just one small positive blip in a much, much larger bearish pattern. It really is like getting one single sunny day in the middle of a long rainy week. So that brings us to the most crucial question, doesn't it? Was today a genuine recovery, the start of a real turnaround? Or was it just a temporary blip, a quick breather before the market continues its slide down? That's the puzzle we've got to piece together. And to answer that, we've got to look under the hood at the forces pulling the strings. And that brings us to what I'm calling the market's big tug of war. You had some seriously powerful players and even whole sectors pulling in completely opposite directions. And this slide just lays it out perfectly. On one side of the rope, you've got the foreign institutional investors, the FIIs, the big global money. And what were they doing? They were selling a lot, over 4,700 crore worth of shares. But pulling just as hard on the other side? Our own domestic institutional investors, the DIIs. They stepped in and bought up over 5,200 crore. I mean, talk about a classic standoff. And this tug of war wasn't just between investors either. It was happening between whole sectors of the economy. You had the IT sector, a real heavyweight, down a full percent. But at the same time, sectors like metals and autos were absolutely on fire, gaining more than 2% and basically dragging the rest of the market up with them. So which specific companies were behind these huge moves? Well, let's meet the day's biggest movers and shakers. In this corner, you had the heavyweight champions, companies like ICICI Bank, Bharti Airtel, and L&T doing the heavy lifting and pulling the Nifty up. And in the other corner, you had the draggers, giants like Infosys and ITC trying to pull the whole thing down. That final positive number we saw, that was just the net result of this intense back and forth. And let's zoom in on the day's MVP, ICICI Bank. It had a solid 1.2% gain, and get this, that performance alone was responsible for almost 25 points of the Nifty's total 172-point jump. That just shows you the kind of power one single heavyweight stock can have on the entire market. Of course, no market exists in a bubble, right? We've also got to look outside our borders at the external factors, the global clues that were shaping how investors felt right here at home. First up, a potential headwind. Global crude oil prices were on the rise, with Brent crude jumping over 3%. Now, for a country like India that has to import most of its oil, that's not great news. Higher energy prices can slow down the economy and add some serious inflationary pressure. But balancing that out was a big positive sign from overseas. Major U.S. markets, we're talking the Dow Jones, the NASDAQ, the S&P 500, they all opened higher. And that positive vibe from the rest of the world definitely provided a helpful tailwind for our own market's attempts at a recovery.
All right, so we've looked at all the evidence, the good, the bad, and all the conflicting signals. So, what's the final takeaway? What was the real story of the day? So, here's the deal. This wasn't just a simple, happy rally. It was a full-on battle. You had a positive headline fighting against a really bearish long-term trend. You had our domestic buyers going head-to-head with foreign sellers. You had strong sectors like banking and metals duking it out with weak sectors like IT. And the whole time, the market was fighting against rising oil prices, getting just a little bit of support from those positive global cues.
And all of that leaves us with one final crucial question. Was today's Green Day a real turning point for the market? Or was it just a temporary truce in a much bigger war between the bulls and the bears? Well, only the next few days of trading will give us the answer.